In business news, the U.S. employment report sent stocks higher Friday, with more on trading trends and what made business news in Africa. Here's Africa 54 business correspondent Jill Malandrino reporting from NASDAQ in New York.
Good evening from the NASDAQ market site in Times Square. I'm Jill Malandrino with the U.S. weekly market wrap and African market wrap. The three major averages in the U.S. are trading pretty good this morning. You could see the Dow Jones up almost 1% and the NASDAQ almost at 1% as well, leading the indexes. And this is really on tech and social media stocks. What's really pumping all three major averages higher are the great all-important payrolls report we got this morning. 255,000 jobs were created versus consensus of 170,000, and the unemployment rate remains at 4.9%. As a result, gold and non-U.S. dollar currency moved lower while the U.S. dollar soared higher, as did equities. Let's take a look at some trading trends over the past few weeks. The S&P 500 index remains not far off record highs, trading in a narrow 30-point range over the last 15 trading days. As investors remain complacent and markets look for a potential catalyst, either push stocks to new highs or allow markets to correct after surging in a straight line higher since the brief late June pullback following Brexit. Now, since April, the S&P 500 is up 6%. Just think about this. We were down 14% on the February 11th low. Even a pullback in oil hasn't dented markets, nor has mixed economic data, while mostly better earnings failed to push markets higher. So we really are stuck in this tight range here, with the exception of the strong activity that we see this morning. So while companies are beating on low expectations, year-over-year revenue is still lower, and that is where the issue lies. 3 central bank meetings over the past week has also failed to generate volumes or broad market moves as volumes remain light. So what will get markets out of the recent trading range is the question traders are asking. Turning to what made business news on the continent this week, Africa's biggest mobile phone operator, MTN Group, cut investor payouts by almost 50% as it reported its first ever half-yearly loss after taking a hit from a $1 billion regulatory fine in Nigeria for missing a deadline to cut off unregistered SIM cards from its network. MTN has also been struggling to accelerate subscriber and profit growth as years of price wars and regulatory pressure hit margins and weakening economies squeeze consumer income. Commercial banks shed 711 jobs last year due to increased use of technology in customer service, marking the first time employment in the industry fell since 2002. Now, this is according to Kenya's central bank, and this is because technology is lending to increased efficiency. Finally, the African Export-Import Bank and the Export-Import Bank of China have signed an agreement to create a $1 billion China-Africa investment and industrialization program to facilitate the creation of special economic zones on the continent, further increasing relations between the two countries. From the NASDAQ market site in Times Square, I'm Jill Malandrino for Africa 54.
We want to know what you think about Africa 54 and the stories we cover. Join the conversation on Facebook. The address is Africa 54, and check out our headlines 24/7 on voaafrica.com.